Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so the pair that I will be speaking about into this video is EUR-CAD. And the reason for which I will be speaking exactly about EUR-CAD is because this pair is very near to providing to us a good trading opportunity. So obviously I want to show you exactly which is this trading opportunity and how we can be looking to capitalize on this pair. Now, as usual, I will be keeping the analysis as educational as possible. So first we will be speaking about the technical side of this market. We will then go and see what we have from a commitment of traders perspective, which is the institutional order flow. So what the biggest banks and institutions are doing in the market. And if you're able to read and follow what the biggest banks and institutions are doing, you do have an advantage over your competition in the market because you can trade alongside with the big players in the market. And by the end of the video, we will know exactly where are the best probabilities for this pair. So without further ado, let's get straight into it. Now, starting here from the monthly time frame, what we can see. Now on the monthly, we can see that the market has extremely strong supply all across this zone and obviously resistance. In fact, this area has been acting as extremely strong resistance here, preceding all this move to the downside. The market again here tested and rejected this area to the downside, acting as an extremely strong resistance zone. Then again, the market here tested and rejected the area, again here tested and rejected. So we have a zone in the market, which is this area here, which is extremely strong supply and resistance. And every time that the market hits this area, it gets rejected to the downside. So on the monthly, situation is quite clear. We have just hit and rejected a very strong historical structure resistance area for this market. Going down on the weekly time frame, what do we see? Now on the weekly, we have a quite different situation. In fact, on the weekly, what we actually have is an impulse to the upside followed by a correction. Now this correction is currently testing strong weekly support. Now which weekly support am I speaking about? Now the support that I'm speaking about here on the weekly is this area here. In fact, this zone was acting as very strong resistance here, and resistance here. And now that the market has broken above it, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. And now the market is testing this previous resistance, turn support. And after a retest of resistance, now turn support, you expect the market to provide a rejection to the upside. So at the moment on the weekly, we are at a support area. And if we want to pinpoint this support or see it in a more clear way, what we can do is we can use the line chart. Now, when you use a line chart, you will see the closes in the market. Now, specifically, the monthly and weekly closes are very important structure areas in the market. And what we can see is that we have two weekly closes exactly here, 1 and 2. And both these closes were very strong resistance zone, which now that the market is testing them here are turned support. So this is exactly the support that I'm speaking about and I was speaking about when we were on the candles chart. So this previous resistance now turns support. And if we zoom in, what we can see is that the market has just hit this support here and already started rejecting it to the upside. Now, generally speaking, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. So in this specific case, from this low to this high. Now, if we take our Fibonacci from this low to this high, we can notice even another very interesting thing. If we zoom in, we can notice that the 0.618, so the golden ratio, the Fibonacci that is the golden ratio, is lining up perfectly with the previous weekly resistance, which is now turned support here, in combination and in confluence with the previous structure resistance now turned structure support, in confluence as well with the closes that we have from a weekly perspective that we have just identified by going down on a line chart. So on the weekly time frame, what we can take from this is that at the moment the market is testing a confluence of support from which we can definitely expect the market to provide a rejection to the upside. Going down on the daily, what do we see? Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now on the daily time frame, we can clearly see that the market has provided now a bullish pattern. Now the bullish pattern that the market has provided here is this M formation here. We have this massive move to the upside, followed by this correction. The market tried continuing higher, but the market failed and created this move to the downside, printing this M formation. Now, after an M formation, what you want to see is the market create a move to the upside. Specifically, you would like to see the market complete the pattern at the previous support, which is now turned resistance. So what we expect here is for the market to create a move to the upside, rejecting this support and completing the pattern at the previous support, now turn resistance, or at least we would like to see the market create a retracement minimum to the 0.382 of the Fibonacci taken on the impulse leg. Now, before I show you how we will be approaching this kind of opportunity and situation with students, let's first go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see on the euro is that with the last report, hedge funds have increased their long positions by 3.7K. So we have 3.7K longs added, reaching 222K long positions and 78.5K short positions, increasing the net positions from 141K to 143K net positions. So a massive increase in the net positioning for the euro. Now, if we go and see what we have on the CAD, what we can see is that on the CAD with the last report, hedge funds have closed 22.4K short positions and opened 3.3K longs. Therefore, we expect a strong CAD, which is exactly what made the market make this move to the downside. We had the biggest banks and institutions that had closed 22.4K shorts and opened 3.3K longs, which means strong CAD, which means that you expect a move to the downside on Euro CAD, which is in fact exactly what the market did. So what we have is the euro, which is strong, but the CAD is very strong as well. So if we are to be seeing this move to the upside, it's only a short-term move to the upside. And then we expect the continuation to the downside. But this means that we can still definitely be looking to capitalize on this move to the upside. And how we will be looking to do that with students. Now, as usual, trading is reactive. Trading is not predictive. And the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But when it comes to confirmations and entries, in that case, the best time frame is the 4 hours. And at the moment on the 4 hours, what we can see. Now, from a 4-hour perspective, we can see that at the moment, everything is bearish. We have a market which has an extremely strong bearish momentum. And until everything will remain bearish, the market will easily continue to the downside. However, this doesn't mean that the M pattern should not complete. The M pattern definitely should complete. It simply means that at the moment on the 4-hour, the market is still not ready for the move to the upside. So what we will be doing with students is, as usual, being reactive and not predictive. What we will be doing is monitoring price action from a 4-hour perspective during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And if, and only if, the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding EuroCAD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good probability and very good risk to reward at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this impulse, which is the first upside target of an M pattern. And as a second upside target, we obviously have the neckline of the pattern itself. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.